One of the most bullish things that we have seen recently for AMC stock is Antara Capital that is dumping shares of AMC. And Antara Capital has a couple new filings out and they're dumping Ape stock. This comes before the court date that we're going to get on June 29th. This leads me to believe something positive is coming and something big is coming for AMC stock. Nonetheless, we'll dive into it here in this video. Hit that like button and subscribe to the channel and source your comments, questions, or concerns down below in the comments section. So let's get into it with Antara Capital and their multiple filings that just came out. So Antara Capital is an over 10% owner of Ape. So they have to file these transactions pretty much as soon as they make these trades. Now, we don't actually get them public usually for a couple of days, and you're getting some more. So Antara Capital on June 7th sold 500,000 shares twice, once at $1.59, again at $1.60 the same day. On June 8th, Antara Capital sold 1 million shares of Ape for $1.60, sold another million shares of Ape for $1.61. This leaves Antara Capital owning 136 million shares of Ape. In the last video we just put out, which was like 2 days ago, Antara Capital owned 142 million shares of Ape. Now they own 136 million shares. If they start to ramp up these sales of Ape, they could quite literally dump almost all of their position before this upcoming court date. Now, we don't know if that's going to happen, and by the time, if they were to dump all of their position, I mean, you probably see it reflected in the price of Ape. Ape would probably fall, and I'm definitely going to be on the lookout for any big drops there. But we won't even know until a couple days after the fact. Now, why am I pointing this out? The fact that Antara Capital continues to sell more shares of Ape. Well, the whole point of this arbitrage trade is to buy Ape and short AMC. That's why there's so much shorting pressure on AMC. That's the reason AMC has not performed the way that other stocks such as GME have reported. By and large, GME and AMC are in the same exact position. Kind of businesses that are not really growing too much, that are not the most favorable businesses to be in. GameStop 10 years ago, different story, right? GameStop today, not so much. People are buying video games online. Companies such as Activision or even console companies, right? Like a Sony or a Microsoft, they're more so selling direct to consumer. A lot of the time, people don't go to GameStop. They go to a Walmart to buy a console. Overall, business in decline. AMC stock, more so a stagnant business. AMC wasn't really growing, nor were they really shrinking over the last decade. And COVID came. GME and AMC both seen the same declines in sales. They both seen the same hardships. And they've both been recovering. Now, where you're currently at is the best point in time for GME and AMC since COVID. GME is now back to profitability. AMC is going to follow suit before them. So AMC stock would be a lot higher than it is today if it was not for this arbitrage trade. I think that's pretty well established. Well, Antara Capital basically started this arbitrage trade by making this investment with AMC's management and securing a yes vote for this trade, for this arbitrage trade. So if Antara Capital continues to sell more stock, in which they've sold over 60% of their initial position already, well, that shows a lack of confidence. And if they really start to dump even more, that's going to show that maybe they know something about the court date coming June 29th. That's why if they really do start dumping even more shares, I want to go massively long on AMC options. That's my personal opinion. And, my definition of massively long AMC options would be different than yours. But that would be confirmation more or less that I am personally looking for. Now, do not buy, sell, trade, or invest anything based off of what you hear in this video. Theoretically, this is not confirmed. We really don't know what's going to happen June 29th. It could be a 20+% positive catalyst or 50% plus, or you could drop 30% coming June 29th. You really don't know. And that's very important to point out. But this from Antara Capital, selling millions of shares of AMC almost every single day now, is a positive sign at the very least that maybe this trade's not going to follow suit like a lot of these arbitrage traders wanted this to be. Now, if we go ahead and take a look at the current data with AMC stock, AMC is looking at a short score of 93, the highest it has been in a very long time, $528.17 million worth of short positions in AMC, estimated short interest or free float at 21.86%, free float out on loan at 36.09%, shares out on loan 186.37 million, days to cover 7.87, cost to borrow 68.14, and 100% share utilization. If we take a look at the option activity as well, you have seen a lot of those deep in the money puts. Now, these deep in the money puts, these $10, $13 puts, have had a dramatic role to play in making AMC fall. Because when they buy these deep in the money puts, it forces market makers to short stock of AMC. Now, we've done the calculations before. We're not going to do it here in this video. Not too much has actually changed. There's about 35% of AMC's float that is sold short. Now, about 22% of that is legal shorts, and that's what you can sit here and prove. The other, 13% is market maker shorts. And these are indiscriminate. We've talked about this before. It's probably a boring concept for a lot of people, but essentially it goes like this. Hedge funds, institutional investors, they have emotions behind these trades. They can decide whether to cover or not to cover. Well, market makers, when they're forced to short stock or buy stock, it's all based on price action. When the price action goes the opposite direction, in this case, hedge funds are buying deep in the money puts, market makers have to go on short stock. When AMC does rally, it has nothing to do with should I cover or should I not cover, like a hedge fund would say to themselves. It is, hey, AMC moved above this break-even price, algos, buy stock back. That's indiscriminate to me. It's not based off of preference, off of investment style, off of profitability, or anything else. Solely based off of price action. And I think that's where a much bigger volatile move could be coming right around the corner. And after all, AMC stock has dropped a lot recently, over 20% from that higher level that we have seen at about $6 per share. It's been a pretty red streak that AMC has been on as of recently. Now, if we look at the cost to borrow average, that is sitting at 145.37%. Cost to borrow max at 311%, and cost to borrow minimum at 50.13%. Cost to borrow fees started to initially spike heading into GME earnings. Well, after GME earnings, you would have expected cost to borrow fees to actually come down. Instead, they continue to trend higher, and this might be the case throughout the rest of June as you get into the next court date, which again, supposed to be June 29th. And this really just shows you volatility. This just shows you that people want a high interest rate to lend out AMC stock based off of there's probably not a lot of shares left to lend out. Currently, you're seeing 0 shares available to be left out. The last reading we got was 9,000 shares available to be lent out. Compared to 113 million shares currently sold short, that's not very good. Now, the thing that I'm most bullish on is the fact that the days to cover has increased 51% in the last 3 months. Now it's sitting at 7.87 days to cover. GME's days to cover is at about 16, and that is very bullish. That's going to make that stock, much more squeezier as well. But AMC stock being even at an 8 is historically high for GME. This is by far the highest level that you have been at on the days to cover in the last 18 months. And even longer than that, you haven't been at these levels in a very long time. Now, let's take a look at this article. This article is interesting, and I think it points out something that you should know. It says GameStop fired CEO Matt Furlong and named activist investor Ryan Cohen as the executive chairman, elevating his role in the company. Now, if Ryan Cohen actually does take the CEO role of GME, probably going to send the stock up much higher, and I think that's ultimately what is coming. So I think this does create another big catalyst for GME that's going to be right around the corner, and maybe that's a reason why on Friday AMC and GME were in the positive. If we take a look at the charts for AMC was up 1.60%, and GME was up almost 6%. GME trying to recover some of those losses you've seen after earnings, after GME just did not give us the profitability some people were hoping or expecting to see. Now, AMC and GME have since seen their RSIs, some of their technical indicators kind of reset, right? AMC's RSI is at 43.24, closer to oversold than to definitely overbought, but you're really not even at a neutral level until you get to 50. So you're decently far off of that still. And given the drop that you have seen recently, getting into an AMC position is less risky today than it was 2-3 weeks ago. A lot less risky. There's a lot more cushion on a risk to reward basis getting into an AMC long position right now. So I do think that does make this a lot more attractive. Now, I wish I could sit here and speculate with any degree of confidence that I know what's going to happen on the next court date. I don't. I know it's going to be a big catalyst, but I really have no idea which way this is going to go. I've personally stated in the past that I think it's possible that we get a revote, and I still think that is possible. But as far as, anything else, I really don't know. But I'll tell you, historically, AMC stock has rallied when we have raised capital in the past. When we have raised capital in the past, AMC stock has went through very parabolic rallies. So why would this time be any different? Theoretically, if we did go through a reverse split and AMC raised billions of dollars, well, why would that not cause a similar bullish reaction like we have seen in the past? Example. There's 4 great examples right here on the charts that you can noticeably pick out that were bullish, right? Bullish events, and they all had to do with AMC raising capital in some form or another. So maybe this time could be similar. Maybe you could really see the stock rally. Not something that I would bet against at the current moment. Now, here in the shorter term as well, next week, you're going to have some major catalysts such as Fed Jerome Powell, as well as the inflation data, and which we'll break that down a little bit more in detail in the next video later on today. So stay tuned for that one. Deep dive on what to expect in the next upcoming week. But it's going to be very volatile. And I think if you do get more downside with AMC, it could be a great, pickup opportunity. And keep this in mind as you go through the next couple of weeks. AMC is at the same market cap that you were at pre-COVID. So, sure, revenues and things like that are not back to where they were pre-COVID, but AMC is probably going to be a lot more profitable this time around. Actually, I know the numbers would show AMC is going to have a much bigger profit when they do get back to profitability than they had before. So really, should the stock be higher from here? Probably. Again, it's being depressed based off of the court date and this court situation, the reverse split. But you're seeing Antara Capital dumping APE. If this was such a surefire win as a lot of people would say, why are they dumping shares at such an aggressive pace? It really makes you question who is in it for what reasons. So I'm going to go ahead and leave you guys off with that one. We have a lot to get into in the next video, and I wanted to keep this one pretty concentrated. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.